Hello everyone, this is Dr. Paz and welcome to our Module 9. We are getting so close to the finish line, our Module 9 virtual classroom. So as you can see, this video will hopefully be posted here for you. And then as I go through the video, I will give you assignment prompts, and then that is what you will be submitting here. And as you can see, we only have one more video virtual classroom left for week 10. So we are very close to the finish line. And for both week 9 and 10, we are actually looking at merchandising, and we are looking at our chapter 5. And as always, I have here your PowerPoint with notes and your student notes handout, a summary, and your demonstration PowerPoint. And then we have two videos here, concepts of inventory and merchandising, income statement and transactions, to hopefully help you. And all I would say for your assignment, make sure you look at the demonstration PowerPoint. And so here we have the assignment template. So let me open up some files here and then we can get started, hopefully. And so hopefully you've enjoyed our course thus far, and hopefully you have had the opportunity to learn quite a bit of accounting. So I'm hoping that that is the case. And I am opening up our files here so you can see them. So let me note here. So what I have done in your, let me make this a bit bigger, trying to organize my desktop here for maximization of your understanding. So I think what we will do is go through each of the items. And so here I give you some check figures as always, right? So for January 24th, your merchandise inventory is a $64 credit, and we see that here. And that's your allowance for doubtful accounts. And I left the dates here for you so that you can enter the transactions, and we'll go through these as we go along here. And then you see you're going to answer using this adjusted trial balance from Quality Office Systems. You are going to answer these questions, which is below. So here you see how to journalize your closing entries, and then I give you an ending capital balance of $65,200. And then I give you each of the requirements where you're doing the adjusting entries in requirement 1, as you can see here, your closing entries, excuse me. Then you're going to set up your T accounts for income summary, capital, withdrawals, and then you're going to post closing entries to the T accounts that you did up here in 1. And then you're going to have your net income or loss, and we're going to add that here. And then here I do give you the net income figure of $83,750, and then you're going to complete that, and then you're going to prepare a multi-step income statement with the same $83,750, but I do give you the gross profit here as well to help you in computing that. Okay, so let's get started. So your first order of business is to let me know if you're going to be completing this assignment using the Word template provided, or if you are going to be a brave soul and try to complete this using the Excel template. So either way, I would take it. So that's your first order of business. And then now we are looking at our first transactions here, which is based on Howie Jewelers, and they had the following purchase transactions, and you're going to journalize all necessary transactions, and explanations are not required. So you could see here we're going to do a debit and a credit and just show our amounts. So if we purchased inventory of $5,100 on account, then our terms are 215 and 45, which means that we get a 2% discount if we pay within the first 15 days. Otherwise, the net amount, the $5,100, is due in 45 days. And then FOB shipping point is freight on board. And the shipping point means that the minute that it ships, the Sanders Diamond, the jeweler import, can record their revenue because they sold it to us. And then we would record the inventory that into merchandise inventory, as you see here, and accounts payable, as you see here for the $5,100, once we receive it. Then we paid freight charges of $400. So you could see freight charges are allowed to be included as part of merchandise inventory. So you want to make sure that your debit is merchandise inventory here, that it is not freight charges. So your second part of your assignment is, did you remember that? And it's okay if you didn't. That's absolutely okay. That's why we're learning. Did you remember that you can add that you can add freight charges to the actual merchandise inventory account? So that's obviously something that students tend to forget, but if you can do that as the second part of your assignment, that would be wonderful. And we paid that via cash, so you see we credit cash. Then we move on that we returned $600 of inventories to Sanders. So since that is a return, we are going to debit accounts payable for the $600. So that's going to reduce our amount here. And we are going to credit merchandise inventory to show as $600 less. Now it says on the 14th that we paid Sanders diamonds less the return. So 5,100 minus 600 is the 4,500, and that 4,500 and then we hit cash, and it was net 2% 15, net 45. So we didn't take the 2% here, but we will going forward. And then here we purchased inventory of 3,500 on account from now Southborough Diamonds, another jeweler import. This time it's 210 net end of month, FOB destination. So in this case, we have 2% discount. The net is due at the end of the month, and FOB destination is freight on board. And the destination means that when it gets there. So when the diamonds are delivered to us is when they can record their revenue, and we would record our inventory, as you see here, merchandise inventory of 3,500 and accounts payable of 3,500. Then we received a $300 allowance from Southborough Diamonds for damaged but usable goods. So then that we would reduce our accounts payable and also reduce our merchandise inventory as well. And then when we pay Southborough, less the allowance for doubtful accounts. So we take the 3,500 minus the 300, which gives us our 3,200. And then we take from the 3,200, the 2%, which is $64. And we're going to use that as merchandise inventory to credit it. And then we have the cash that we do. So that is your first problem, showing all of your entries. And as you can see here, the $64 credit. So hopefully you received that. And then we move on to our next aspect here, which is our trial balance for quality office supplies. And then we are actually going to journalize transactions, right? And so then we will go through here. And I think the adjusted trial balance is as follows. And then here we're going to journalize the closing entries that we have. So when we look up here, we have merchandise inventory. So we have accounts payable. I think there's a piece missing here that we have to get from the textbook. So this is, let me see, exercise 520 and then 523 to 525. I do believe there might be something missing here. So 523, we know we have an ending capital balance, but we're missing the journal entries. So please go into the textbook and make sure that you get the journal entries here. But then you'll see here merchandise inventory and accounts payable. Then we probably return some items. So we have accounts payable and merchandise inventory. Then we have merchandise inventory and cash. And then we have accounts receivable and sales revenue, and we're taking the 2% discount here. And then we have our cost of goods sold and merchandise inventory. So this right here is a compound entry. And when we make a sale, we record the sales revenue. And then since it is merchandise inventory and it is on a perpetual inventory system, then we have our cost of goods sold, and our sales revenue minus our cost of goods sold is our gross profit. And we'll get some practice of that as we go on. So in order to get these transactions, I think I forgot to copy right from our textbook, but thankfully you have our textbook. And so you can do that. So the third portion of this assignment is to acknowledge in your submission for the virtual classroom that you have to go ahead and put in here for this particular problem, 523, 524, and 525, you might have to access the textbook to get the additional information that you need. And then here are your journal entries as you see them. And then we move into our closing entries here. And so once we start doing our closing entries, you see sales revenue is debited because we want to close it out. And then we're going to credit income summary. And then for our expenses, cost of goods sold, selling expense, administrative expense, and interest expense, you see that we are debiting the income summary for that. And then we're taking our capital and we're crediting it and debiting the income summary. And then with the withdrawals, we're crediting the withdrawals and we're debiting the capital. And then you see that the T accounts, we have our balance and then we have our closing entries, and obviously the income summary should be 0, the withdrawal should be 0, and our capital account should be what we place in the statement of retained earnings. And then if we look up here, we see the 235,700 is our revenue, and if we subtract the 151,950, all of our expenses, we get the 83,750 as our net income. And then that 83,750 is what we're placing, right? And so here I give you all of the accounts, and all you're doing is just entering the 235,700, your cost of goods sold, your selling expenses of 27,400, your administrative expenses of 14,200, and lastly, your interest expense of 2,800. So we still have the total expenses of the 151,950 and our net income of 83,750. And then we move to a multi-step income statement. And then you see here we still have our net sales of 235,700, but to that we are subtracting the 107,550 for our COGS, cost of goods sold. So that gives us a gross profit of $128,150. Then we subtract our operating expenses, which includes selling expenses of 27,400 and our administrative expenses of 14,200. So our total operating expenses is $41,600, giving us an operating income of 86,550. And then we're going to put under the category other income and expenses our interest expense, and we're going to subtract 2,800 to get our net income of 83,750. So the other portion of this assignment is to note which is your preferred income statement. Do you like the simplicity of a simple single-step income statement where you list all of the revenues and subtract all of the expenses to get to your net income? Or do you prefer a multi-step income statement where you have several categories? So you're taking your revenues minus your cost of goods sold to get to your gross profit. You're subtracting your operating expenses and you're subtracting other income and expenses to get to your net income. So the other portion of your assignment for this virtual classroom is to note which is your preferred income statement. Is it the single step income statement or the multi-step? Which one do you think provides you with the information that you would like? So that is pretty much your assignment for this week. So let me close out of this and let's go into our demonstration PowerPoint for the remaining of this session, so that way I can show you just some information for that and how it relates to your assignment. So what I've tried to do is take, and I'm not going to put this in slideshow, well maybe I will, but sometimes when I do that, this Screencast-O-Matic doesn't like me. But anyway, we start off with, and here you see Hartford Jewelers has these purchase transactions, and you can see they're probably very similar to what we went over for your assignment, but now we'll do it again and see how we go. So here we will look at each one individually, where we purchased inventory of $5,400 on account from Surrey Diamonds, who's a jewelry import, and these terms are 315 N45 FOB Shipping Point, which means there is a 3% discount if you pay within the first 15 days. Otherwise, the net amount, in this case $5,400, is due in 45 days. And Surrey Diamonds, the jeweler importer, can actually record revenues FOB Shipping Point, which means they can record revenues the minute that they ship it. So here, very similar to your assignment, you see we have merchandise inventory and accounts payable that we're crediting. Then again, the freight charges, this time $300, that we know now that we can put that to merchandise inventory, not to freight charges. And we paid cash for that. Then we returned $900 of inventory, so we're just going to do a reverse of what we did in our first entry. Instead of crediting accounts payable, we are going to debit it, and we are going to credit merchandise inventory to show the return of the $900 worth of inventory. Then we actually paid Surrey Diamonds less the return. So in this case, we had $5,400 and we returned $900 to give us $4,500 that we paid. And so we credited cash because it is already paid, and we debited accounts payable. And then we now purchase an additional $3,800, this time from Swift Diamonds. And there we had 310N end of month FOB destination, very similar to our problem, right? So we have 3% discount if we pay within 10 days, and otherwise the net, the $3,800, is due at the end of the month. And Swift Diamonds can record the purchase when it arrives at our location because it's FOB destination. But the same entry we did for the first one, where we're debiting merchandise inventory and we are crediting accounts payable. And then we received an $800 allowance for damaged goods, but they're still usable. So we're going to do the same thing as if we did a return, where we are going to debit accounts payable for $800 and then credit merchandise inventory for $800. And then we pay Swift Diamonds less the allowance and less the account. So since we started off with $3,800 and we had an allowance of $800, that leaves us $3,000. And then we had 3% as our discount, so that would be $90. So we're paying them $2,910 cash, but then we need our debits to equal our credits, so we need to record the $90 discount against merchandise inventory, which is a credit. So that is our first example. So another aspect of your virtual classroom is, now that you've seen the demonstration problem, how confident do you feel in completing the assignment? So we went over the assignment first, and now we're going over the demonstration problem. So do you see the similarities between the demonstration problem and your assignment? Okay. So moving on, we have this information and we're going to calculate the missing pieces, right? So we're going to take each one at a time here. So in this case, when we're looking at A, if I go back, A is, you see that right there. And so there, we're going to do is just take the $86,950 and subtract the $60,200 to get our gross profit of $26,750. So you see here, we start off with gross sales, then we reduce sales returns and allowances, and we reduce sales discount to get to net sales. So sales minus returns and allowances minus discounts equals our net sales. And then net sales minus COGS, cost of goods sold, gives us our gross profit. So now let's move on to B, where we have 115,000, and we're going to subtract the 98,120 and then subtract the 850 to get 3,560. And then from the 98,120, we are going to subtract the 31,720 to get 66,400. And this is probably the easiest done in Excel. So another aspect of this virtual classroom is, would you consider doing this problem E518 in Excel? Or do you think it's easier to do it in Word? Which is your preference? In my opinion, this is a lot easier done in Excel. But you can answer any which way you like. There's no right or wrong answer. It's just your preference. So now let's move on to answer D. In that case, we're just taking the 65,100, subtracting 1,630, and subtracting $440 to get our net sales of 63,030. Then we're going to subtract the 41,200 to get our gross profit of 21,830. And then similarly, we're going to work backwards here from F and G. And then for F, you're going to have to add $850, right, plus the $2,000. And then you're going to get $1,015 in order to get your item G, which is $112,150. So for the last one, I would recommend that you do item G first and then get your net sales number. So another aspect of your virtual classroom, did you think to solve for item G before item F in order to get that last equation? And it's okay if you didn't. That's why we're learning. So now we have our adjusted trial balance. As you see here, our debits equal our credits. And then we're going to, again, journalize entries, do our T accounts, and prepare our single step and multi-step income statement, which is also very similar to your assignment. So in the last aspect of this virtual classroom is, do you feel more confident after completing exercise 522 to 524 in completing our assignment for this week? So hopefully by going through this demonstration problem together, you're able to complete your assignment. But just tell me how confident you are in doing so. And it's okay if it's not very confident. That's why we're going over these together here. So here we have our sales revenue that we are closing out to income summary. And the easiest way to do this is to make sure that your income summary takes the account balance, the account natural side of the account of the actual account we're trying to close. So in that case, revenues usually has a credit balance, so income summary would be credited. Expenses usually have a debit balance, so income summary would be debited here. And you see sales returns and allowance and sales discounts, those have a debit balance. Those are contra revenue accounts. So the same way we have accumulated depreciation that is a contra asset account, we have sales return and allowances and sales discounts that are a contra revenue account and have a debit balance, along with our cost of goods sold and selling and administrative expenses and interest expenses. And then we have our capital that is a credit, so we are going to debit income summary, and then we have our withdrawals that we are going to credit and then debit the capital account. So what we have here is that our net income equals revenues minus expenses, and in our case the revenues are going to be the 234,000, and then you're going to subtract the 1,500, subtract the 1,900, and then add, and then you're going to subtract your cost of goods sold for 93,600, subtract your selling expenses for 27,600, subtract your administrative expenses of 14,600, and lastly, from your revenues, you're subtracting interest expense of 2,000, and you are going to get your net income figure. So now let's do our simple single step income statement where we automatically start off with net sales revenue, and keep in mind that your net sales revenue is your gross revenues minus your sales allowances and returns and discounts. Then you're going to subtract your cost of goods sold, your selling expenses, your administrative expenses, and your interest expenses to get a total for your interest expenses, and then you have your net income. And now into our multi-step income statement. We start off with the gross sales revenue, then we subtract sales returns and allowances and sales discount to get to our net sales revenue, which is our first category in which we have our first kind of subtotal in our multi-step income statement. So then once you have your net sales revenue, you are going to subtract your cost of goods sold to get to your gross profit. So that's another subcategory or subtotal in our multi-step income statement. After our gross profit, we are going to start populating our operating expenses, which include selling expenses, administrative expenses for our total operating expenses. Another subtotal in our multi-step income statement. Then we have our operating income. So we take from our gross profit of $137,000, and then we're going to subtract our total operating expenses of $42,200 to come up with our operating income of $94,800. Then we have another subcategory, other revenues and expenses, and in this line we are going to note our $2,000 of interest expense. And that is the only item we have for our total revenues and expenses. And then we have our net income. So whether you're using the single step or the multi-step income statement, the net income amount is the same. The only difference is that in the single step income statement, you list your revenues all together and then you list your expenses all together, hence single step. Revenues minus expenses equals your net income. Whereas on the multi-step income statement that you see here, we have several categories where we're going from our sales revenue and we're subtracting returns and allowances and sales discounts to get to our net sales revenue. And then from our net sales revenue, we're subtracting our costs of goods sold to get to our gross profit. Then we're tabulating all of our operating expenses to get our total operating expenses and subtracting our total operating expenses from our gross profit to come up with our operating income. And then from our operating income, we're subtracting other revenues and expenses. And in this case, we only have one, which is interest expense, to ultimately come up with our net income amount. And that is the end of our demonstration problems for Chapter 5. So again, one of the prompts for your virtual classroom is to note your preference. Do you prefer the simplicity of revenues minus expenses equal net income for a single step income statement, or do you prefer the multi-step income statement with various categories where we're taking sales minus our cost of goods sold and minus our returns and allowances and discounts to get our net sales, and then subtracting costs of goods sold to get to our gross profit, then subtracting our operating expenses to get to our operating income, and then subtracting our other income and expenses to get to our net income. So the last item I'd like to cover is, since we've gone over the income statement and transactions, I think this video would be helpful. But the first video is to just understand generalized concepts of accounting, of inventory. And I think this video would be helpful in doing that. So I'm going to end by playing this video, and then the last prompt for your virtual classroom is, did you find both videos, this concepts of inventory, and when we go back into week 9 merchandising, the merchandising income statement and transactions, both of those videos, did you find them helpful? And if you did, which one was more helpful for you towards our assignment? So I would say definitely watch this video on the concepts of inventory and watch the video merchandising inventory. And as you can see, for the concepts of inventory, It's basically discussing the impact of inventory on determining your cost of goods sold. And then it goes into like an illustrative example. And as you can see, it's kind of showing you your purchases and your beginning balance. And then it's showing you how to get to your ending balance. And I would like for you to end our virtual classroom here by going through these both videos here. And then we have inventory valuations, which is FIFO, and it shows you how to calculate that. And then we have LIFO, which is another inventory valuation method. Let me get to that. So we have here FIFO, LIFO, and then we have an average cost. So basically, the last part of your assignment is to note which of these two videos helped you. And then here, since we're doing LIFO, FIFO, and average cost, which of these three valuation methods do you find most useful? And then here, when we're looking at merchandising inventory, it kind of shows you the debits and credits in a T account for merchandising inventory, and it shows service and business items, and it shows you invoices and where this information is on an invoice. So hopefully you find these videos useful and the T accounts that they're providing useful as well. So just let me know in the virtual classroom assignment about the videos, and I hope you enjoyed them, and I hope you have an easier job now in completing your assignments. Thanks for watching.